Ready for a walk on the wild side of history? We're diving into some of the most mind-blowing financial meltdowns that the world has ever seen. They've shaped our economies, rewritten our rules, and given us valuable lessons for the future. 1. The Tulip Mania, 1637. One of the earliest recorded financial bubbles, Tulip Mania occurred in the Dutch Republic, now the Netherlands, when prices for some tulip bulbs reached extraordinarily high levels. At its peak, a single tulip bulb could sell for more than 10 times the annual income of a skilled worker. However, the bubble burst in February 1637, leading to a widespread financial crash. 2. The South Sea Bubble, 1720. The South Sea Company, a British joint stock company, promised potential investors massive profits from its monopoly of trade in the South Seas. This led to a rapid rise in the company's share price. However, by the end of 1720, the bubble burst, causing substantial financial ruin for many investors and damaging the British economy. 3. The Panic of 1907. Triggered by a failed attempt to corner the market on the stock of the United Copper Company, this crisis led to a severe monetary contraction. It revealed vulnerabilities in the U.S. banking system, eventually leading to the establishment of the U.S. Federal Reserve System in 1913. 4. The Great Depression, 1929 to 1939. The most severe economic depression of the 20th century began with the U.S. stock market crash in October 1929 and spread globally. Unemployment rose to 25% in the U.S., and international trade collapsed. This period saw widespread poverty and high levels of debt. 5. The 1973 oil crisis. In 1973, OAPEC, Organization of Arab Petroleum Exporting Countries, declared an oil embargo against nations perceived as supporting Israel during the Yom Kippur War, causing the price of oil to quadruple by 1974. This led to a stock market crash and a severe recession worldwide, with long-lasting economic effects. 6. Black Monday, 1987. On October 19, 1987, stock markets around the world crashed due to panic selling. The Dow Jones Industrial Average, GIA, fell 22.6% in a single day. Despite the severe drop, markets rebounded relatively quickly. 7. The Asian Financial Crisis, 1997-1998. A crisis that gripped parts of East Asia began with the collapse of the Thai baht after Thailand's decision to no longer peg its currency to the US dollar. It led to a severe financial downturn in several Asian countries, impacting global markets. 8. The dot-com bubble, 2000. This bubble was driven by the rapid rise of internet-based companies, dot-coms. Many such companies, despite having unproven business models and no profits, saw their stock prices soar. The bubble burst in 2000, causing a crash in the Nasdaq, the U.S. stock market index weighted towards technology companies. 9. The Global Financial Crisis, 2008. Triggered by the subprime mortgage crisis in the U.S., it led to the collapse of investment bank Lehman Brothers and resulted in severe, long-lasting global economic consequences. This crisis saw the implementation of massive bailouts and monetary policy changes. 10. The European Sovereign Debt Crisis, 2010. Several Eurozone countries were unable to repay or refinance their government debt, leading to a crisis that required massive financial bailouts. Greece, Ireland, Portugal, Cyprus, and Spain were the hardest hit. From Tulip Mania to the Euro crisis, history has thrown some major curveballs at us. But guess what? We're still here, still swinging, and more prepared than ever for the next shakeup. So, whether you're a cautious saver or a high-stakes roller, remember this: knowledge is power, and those who understand the past are the ones who cash in on the future.